Welcome to this week's Crypto Recap. This Monday marked the trading debut of World Liberty Financial's WLFI token, the centerpiece of the Trump family's crypto ventures. The token initially surged above 30 cents before sliding throughout the day. By Thursday afternoon, WLFI was priced at 16 cents. The launch unlocked 24.6 billion tokens, giving the Trump family and affiliated entities an estimated $5 billion in paper wealth. Data shows insiders control more than half the supply, with one entity holding 22.5 billion WLFI. Donald Trump Jr. defended the project, calling WLFI the governance backbone of a real ecosystem, changing how money moves. The token's debut drew nearly $1 billion in trading volume within its first hour across major exchanges. On Thursday, World Liberty Financial froze Justin Sun's wallet, containing 595 million WLFI tokens worth about $107 million after blockchain data showed $9 million in transfers, sparking a 20% daily price drop and leaving the Trump-linked project down 42% since its September 1 debut, despite Sun holding nearly $700 million in vested tokens. From there, we turn to Washington, where a high-profile platform has just received regulatory clearance to return to U.S. markets. Prediction market platform Polymarket has received regulatory clearance to return to the U.S., following a no-action letter from the Commodity Futures Trading Commission. The decision allows Polymarket to legally offer event-based contracts through its acquisition of QCX, a licensed derivatives exchange and clearinghouse. Polymarket has been given the green light to go live in the USA by the CFTC, CEO Shane Copland wrote on X, crediting the commission for moving in record timing. The approval comes after years of regulatory scrutiny. In 2022, Polymarket reached a settlement with the CFTC for operating as an unregistered platform, and last year, Copland's home was raided by the FBI. Both the CFTC and the Department of Justice closed their investigations in July without filing charges. Staying with regulators, America's two top market watchdogs also issued fresh guidance this week. U.S. regulators have issued long-awaited clarity on spot crypto markets, confirming that registered exchanges may now list certain digital asset products. In a joint statement, the Securities and Exchange Commission and the Commodity Futures Trading Commission said securities exchanges, designated contract markets, and foreign boards of trade can facilitate spot trading, including products with margin or leverage, if they meet investor protection and transparency standards. SEC Chairman Paul Atkins said, "Market participants should have the freedom to choose where they trade spot crypto assets." Acting CFTC Chair Caroline Pham called the move the latest demonstration of our mutual objective of supporting growth and development in these markets. The agencies also directed platforms to work closely with custodians, provide clear reference pricing, and publicly share trade data. The guidance arrives as Congress continues debating a broader market structure bill, leaving regulators to act under existing law. Another major theme this week was tokenization, with new developments spanning regulators and private firms. The U.S. Federal Reserve is preparing to spotlight tokenization at its Payments Innovation Conference on October 21st. The event will examine stablecoin models, on-chain assets, and the convergence of traditional and decentralized finance. "I look forward to examining the opportunities and challenges of new technologies," said Fed Governor Christopher Waller, noting the role of tokenization in building safer and more efficient payment systems. Meanwhile, Galaxy Digital has become the first NASDAQ-listed company to tokenize its SEC-registered public equity directly on a major blockchain. Partnering with Superstate, Galaxy shares are now available on Solana, with legal ownership updated in real time as tokens change hands. CEO Mike Novogratz said the initiative brings the best of crypto, transparency, programmability, and composability into the traditional world. Adding to the momentum, Ondo Finance has launched over 100 tokenized U.S. stocks and ETFs on Ethereum, with plans to expand to 1,000 assets by year-end, providing global investors 24/7 on-chain access to equities. In other news, creators are seeing an immediate payout from changes at a popular Solana platform. Solana-based token launchpad, Pump.fun has introduced a new dynamic fee model under its Project Ascend framework, immediately boosting earnings for token creators. The system links fees to token market capitalization, granting smaller projects up to 0.95% of each trade, compared with just 0.05% under the previous model. The change had a swift impact. Within 24 hours of the update, creators received nearly $2 million in rewards, compared with only $198,000 the day before. Streamers and token builders say the overhaul could rival traditional platforms like Twitch. It allows small creators like myself to make more money a month than a Twitch or Kick streamer does in a year. One Pump.fun live streamer, Jidal, told Decrypt. Turning to Wall Street, one of crypto's best-known exchanges is aiming for a public listing. Crypto exchange Gemini, founded by Cameron and Tyler Winklevoss, has filed for a NASDAQ listing under the ticker symbol GEMI. The company plans to offer 16.7 million shares at $17 to $19 each, seeking to raise up to $317 million and secure a valuation as high as $2.22 billion. According to the filing, Gemini reported a net loss of $282.5 million on $68.6 million in revenue for the 6 months ending June 30th, compared with a $41.4 million loss on $74.3 million in revenue during the same period a year earlier. The New York-based platform registered as an emerging growth company, which allows it to adopt lighter reporting requirements, including reduced disclosures on executive pay and exemption from certain audit rules. Gemini's filing comes amid renewed enthusiasm for digital asset firms on Wall Street, following successful debuts by Bullish and Circle earlier this year. If approved, Gemini would become the third U.S.-listed crypto exchange, joining Coinbase and Bullish. Meanwhile, stablecoins continue to take center stage with a new network designed for payments. Crypto infrastructure provider Fireblocks has launched a new platform designed to streamline how companies move and build with stablecoins. The initiative, called the Fireblocks Network for Payments, connects more than 40 participants at launch, including stablecoin issuer Circle, fintech startup Zero Hash, and Bridge, a company recently acquired by Stripe. The goal is to make cross-border transfers and stablecoin integrations faster and less error-prone. Michael Sholoff, Fireblocks co-founder and CEO, told Fortune, "Either it's super expensive from an engineering standpoint and takes them a lot of time, or if they're starting to do it manually, then of course it's basically prone to errors, so they can lose money." Fireblocks already processes billions in stablecoin transactions daily, hitting a record $212 billion in July. The new network expands beyond trading use cases, offering multi-stablecoin support and positioning itself as a rival to Circle's payment system, at a time when stablecoins are gaining traction across fintech and banking. In related news, on Thursday, Stripe and Paradigm unveiled a payments-first blockchain called Tempo, now in private testnet with partners like OpenAI, Deutsche Bank, and Shopify, marking Stripe's latest crypto push after its $1.1 billion Bridge acquisition and Coinbase base integration. On the infrastructure side, a major blockchain approved a sweeping upgrade. Solana has voted overwhelmingly in favor of its Alpenglow upgrade, a consensus overhaul designed to multiply network throughput and slash transaction times. More than 98% of stakers backed the measure, easily clearing the 33% quorum requirement after a 2-week governance process involving over half of validators. Alpenglow introduces 2 new components: Voter, which reduces transaction finality from more than 12 seconds to as little as 150 milliseconds, and Rotor, which replaces Solana's proof-of-history system to accelerate data transfers between validators. Together, the changes are expected to increase throughput by about 100-fold. At these speeds, Solana could realize Web 2 level responsiveness with L1 finality, unlocking new use cases that require both speed and cryptographic certainty, the Solana Foundation said in a blog post. Developers and community members described the leap as a dramatic step forward for the network's infrastructure, with implementation now set to proceed. Ethereum also made headlines this week with a move that stirred community debate. The Ethereum Foundation has announced plans to sell 10,000 Ether, valued at roughly $43 million, through centralized exchanges over the coming weeks. The organization said proceeds will support research and development, ecosystem grants, and donations. To avoid market disruption, sales will be split into smaller orders rather than a single transaction. The move has stirred debate within the crypto community. Some questioned why the foundation chose centralized exchanges instead of decentralized platforms or over-the-counter deals. One user on X described it as the most polite way I've seen someone dump on us ever. The sale follows the foundation's new treasury policy introduced in June and comes as Ether trades above $4,300 after a strong 30-day rally. Elsewhere, Kraken expanded its reach with a new acquisition. Crypto exchange. Kraken has acquired Breakout, a proprietary trading platform that funds traders based on demonstrated performance. The deal brings Breakout's evaluation-based model directly into Kraken Pro, giving qualified users access to up to $200,000 in notional capital and the ability to keep up to 90% of profits. To qualify, traders must purchase and pass an evaluation that tests risk management, drawdown discipline, and strategy consistency. Breakout accounts are capped at $100,000 each, with multiple accounts permitted up to the $200,000 aggregate limit. Breakout gives us a way to allocate capital based on proof of skill rather than access to capital itself, said Kraken co-CEO Arjun Sethi. Breakout CEO Alex Miningham called the integration a unified ecosystem for trader development and capital deployment. And finally, two platforms faced disruptions, but with different outcomes. Venus Protocol, a lending platform on BNB chain, suffered an exploit on Tuesday when attackers redirected its core pool comptroller contract to a malicious address. The breach drained about $27 million in assets, prompting Venus to suspend withdrawals and liquidations while the situation was investigated. On Wednesday, the platform confirmed it had recovered the stolen funds and restored services, assuring users that its front-end and custody systems were uncompromised. The pause was necessary not just to secure the phished funds, but to conduct full security checks, Venus wrote on X. In related news, Ethereum Layer 2 Starknet suffered a multi-hour outage on Tuesday that erased about an hour of activity before developers reorganized the chain and restored block production, with a full incident report still pending. And that's all. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening.